The views and opinions expressed on any program are those of the producers and/or the persons appearing on the program and do not necessarily reflect the views and opinions of FRC Media, Bristol Community College, or the City of Fall River.
Well, welcome out there once again to my program. Always a pleasure to be here. Always happy to have you out there in the audience. I have a guest that I believe you'll find very, very interesting. It's something that, well, you hear about on the radio a lot of advertisements on TV, and it's something that, well, sometimes people do not quite understand. It's a good program, and we're going to talk about how it works, how you can apply, what to expect. So let's get going with my guest, Ellen Connors. Welcome to the program.
Hi, thank you. Thank you, Richard.
Nice to have you here.
Great to be here.
Yeah, we met at the South End Neighborhood Association meeting
Yes.
a month or two ago. You were there with a group of people.
Mm-hmm.
And they were talking about reverse mortgages and some other legal matters actually too.
Right.
So,
Right.
here you are, reverse mortgages. Well, let's start off with what is the name of your the company you work for?
I work for Direct Finance Corporation. I'm a certified reverse mortgage professional. We are mortgage brokers, so we arrange financing, and we have a host of lenders that we're able to sell loans to.
All right, so in other words, you get someone who is interested in a reverse mortgage,
Mm-hmm.
and that actually gets passed on to a lender,
Correct.
and you
Correct.
have a source of maybe several different lenders.
Mm-hmm.
Banks, do they get involved with reverse mortgages?
Oh, some of them are banks. Most of them are mortgage companies that specialize in reverse mortgages. Some of them are servicers that actually do both regular mortgages and reverse mortgages.
So, mortgage lenders?
No one would really recognize any of the names anymore.
No. Well, I guess some of them are just put together by wealthy investors.
Mhm.
They want to put their money into something that pays better than like a 0.5%.
Right.
Banks are, I mean, they're getting away with I don't know what, but. So, let's say someone out there in my audience, and I'm sure there are people out there who are thinking about reverse mortgages.
Mhm.
And they want to contact someone about a reverse mortgage. How do they get in touch with you?
Well, I can be reached at 617-750-5266. My email address is econnors, ECONNORS, @dfcmortgage.com. And you can also find me actually on the National Reverse Mortgage Lenders website
Okay, maybe that would be easier.
as a CRMP
Yeah,
designation.
so the National Reverse Mortgages website.
Yes, it's an association
Okay.
website, and they have certifications for us.
All right, so someone called you up
Okay.
and they say, I saw you on the Richard Urban Show and I want to get a reverse mortgage. I own a piece of property. We've been here for 50 years. We want to go to Florida. We don't want to worry about, well, we could use the extra money.
Okay.
Get the money. We don't want to sell a house. We might give the house to our children, but in the meanwhile, we'd like to have a reverse mortgage. Now, let me ask you this question that comes to my mind. Suppose they have a life estate on the property. Do they still qualify?
Yes.
Okay, good. That's I think that's something important.
Right.
People will have that life estate and they'll still
Right.
qualify.
Correct.
Oh, good.
Yes. It's an FHA rule, a HUD rule.
Good, good. So, you get the phone call. What's the next step, Ellen?
What's the next step is for me to have a conversation with them. or someone. And really what happens is we ask a series of questions. I really want to know why you want to do it. So it helps me to guide you through the process, whether it makes sense, whether it doesn't make sense, whether or not there's enough equity there to meet your needs. And so I'd be asking for your birth date and what you think your property value would be worth. And then I put it into a computer system and it calculates numbers for me. And then I can give you some ideas about how you can use the money as far as whether you take it as a line of credit and a monthly payment, paying off an existing debt, things like that.
Okay, so the money could be used to pay off an existing debt,
Yes, like a mortgage or
a mortgage,
real estate taxes,
taxes.
Mhm.
Well, that's
yeah,
interesting.
home equity loan.
All right, car loan. You could use the money. Maybe you have a
Mhm.
car and there's a loan on a car. You could take
Correct.
some of that money and so, in other words, there is this opportunity to get some what you might call upfront money.
Correct,
Is
there's
that
a
what the- you know-
percentage that's allowed, yes.
Yeah,
Mhm.
of upfront money to pay off maybe some existing
Mhm.
debt. And then thereafter,
Right,
the homeowner would be able to get like a monthly check?
they could.
Is that how
Mhm.
it goes?
It's
Good.
really what their needs are. So when going through that series of questions, we have a dialogue to understand what it is that you're looking for. So say you needed $500 a month extra, you might be able to get that for the rest of your life. You might be able to get it for a certain number of months. You might be able to do it in addition to a home equity, a line of credit that this loan allows for. So it's actually very flexible. So it really is more customized. I mean, there's a standard set of procedures for everyone, but really understanding why someone wants to do it and how it's going to benefit them, I need a lot more information from them to present the situation that
So,
would be best for them.
Each reverse mortgage is pretty much different in a
Yes,
sense,
yes, yeah,
depending on what the person wants,
correct.
in a sense of needs, and
Mm-hmm.
maybe based on some of the obligations that they might have.
Correct, right.
So you have this conversation, and this pretty much takes place over the telephone?
Initially, yes. Mhm.
All right. Let's say you get to feel that this person could qualify, they
Mhm.
actually own the house.
Right, that's true, that is one
It's
of,
not someone who wants to get the reverse mortgage on their neighbor's house, right?
right. You know, it needs to be their owner occupied residence.
Yeah. All right. Now, what kind of, do you require some documentation, like a deed?
Mhm. Actually, HUD does. So the government, the FHA, the Federal Housing Authority, sets out these guidelines. So everything to do with a reverse mortgage is now controlled by the government, and they advise us on what we need to do. So there'll be identification, some income information now, property, usually your insurance binder, your copy of your real estate tax bill. So things like that are very helpful.
Okay, so this is pretty much HUD-driven
Yes.
in a sense?
Yes, and it's insured by HUD. It's all
And it's a
federally regulated.
Federal program?
The
All right.
rules, the guidelines, everything.
Okay. And the lenders are just private companies, et cetera, that
Mm-hmm.
want to loan money in regards to a HUD program called reverse mortgages?
Right, they're called the HECM, the Home Equity Conversion Mortgage.
Wow.
So, yes.
All right, so you get some of this information. Now, do a title search?
A title search needs
Who
to be
does the
done.
title search?
An attorney of their choice or the lender's choice, whichever they prefer.
Not HUD?
No, HUD does not do that. They just
Okay.
guide us with the rules of what it needs to say and how it needs to be insured and so forth.
All right, and so you get an attorney to do the title search.
Mm-hmm.
And that could be an attorney that is affiliated with the lender.
Right, or someone's personal real estate attorney, if they would like to choose them, we would allow that as well.
Oh.
They have to provide certain documentation, insurance, and the title book company's information and so
Oh,
forth.
all right, so
Mhm.
not quite like a bank. Bank usually wants to use their own attorney.
Correct, right, we allow
They want
others.
the owner to fudge the title. Do you require title insurance?
HUD requires title insurance on the loan, yes, yes. But whether they choose to do their own owner's title is their option. So that's an option for the borrower as well.
All right. Now, need to have an appraisal. So who does the appraisal?
The lender chooses a company that's totally separate that actually does the appraisal. So a separate management company is required
To do the appraisal?
to do the appraisal, yes. We order it, and it gets sent out and comes back.
All right. I don't know if I asked you, credit check?
There is a credit check, mostly for federal debt. Make sure that there's no...
Mostly for federal debt?
Right, because the government doesn't want to give a loan to somebody when they are owed money without being paid first.
All right, so if the homeowner owes the federal government a lot of money in back federal taxes.
Or a delinquent student loan that someone's co-signed for, that all needs to be brought current.
That could be a problem. So in other words, some of the money in regards to the reverse mortgage
Right.
might have to be used to pay off the tax liability to the federal government?
Correct.
Oh,
And some have to be paid ahead of time before we can even do the loan. Some can be paid at closing.
I see. Okay, so there you have the reverse mortgage
Yeah.
situation. Now, you actually go to the home,
I do go to the home, yes.
all right?
I'm a local person.
And what do you look for at the home? In the home?
At the home? Well, I kind of go around the house. The property itself is the only collateral, is the only repayment method. So someone actually does not have to put up income and assets to qualify for a loan like you would on a regular mortgage. So because the property, it's a little more stringent, the property has to be in reasonably good condition. Health and safety issues are the main concern, and structural issues to make sure that the paint is there's no chipping paint and things like that. That could be a health and safety issue. So
Okay.
again, the FHA, Federal Housing Authority, HUD, requires this information.
So you basically have a checklist of what
Yeah.
the home needs to have?
Right, I'm not, that's not my area of
You're
expertise,
not the home
but I'm familiar with it, enough with it to kind of give some guidance. And then when the appraiser comes out, that's when the actual details get written. And if there's anything additional needing to be done, the appraiser would actually. So say there was a leak in the ceiling. Someone might need to have the roof checked. They may need a roof inspection by a licensed roofer to give a quote to say either the roof is fine and that was an old leak, or that perhaps a new roof is required.
What about a home inspection, complete home inspection? Is
That's not necessary.
That's not necessary?
No, just the
Oh, that-
appraiser.
That's wonderful. I mean, in a sense, well, I mean, a home inspection, usually a buyer would like to have a home inspection, make sure they don't, get something where the boiler doesn't work,
Right.
you get other problems with the house, mold, bad insulation.
Right. The appraiser does it on a visual basis, so they are looking for things like mold in the ceiling, but they're not taking walls apart. They have to go up into the attic, take pictures of the roof.
The
So it's
appraiser-
anything obvious,
Yeah.
yes.
All right, so the appraiser does that, and the appraiser will have to get into the house.
Yes, yeah, usually about 15 or 20 minutes, and they have to be able to get into closets. They look at the electrical box.
15 or 20 minutes?
That's it.
That's really a cursory type
Yeah.
inspection. Smoke alarms? Are they looking for smoke alarms?
Not usually, not a refinance. It's a refinance, so only on a purchases usually is what you would need a smoke alarm for.
All right, so,
Yeah, but they're good to have.
yeah, oh, yeah, they're good to have fire, the
Yes.
fire alarms, smoke alarms. So it seems that the inspection itself is not, they're not picking up the rugs to find out, if you got any,
No.
okay.
No, it's just that it's a safe place for the borrower to live. I mean, the borrower's best interests are also considered. So HUD wants to protect its collateral, but it also wants to make sure that the borrower is safe.
And there's no liability in the sense that someone else could get hurt like the stairs leading to the basement?
Right, that would be important, but they're more worried about the borrower themselves, going up and down stairs, outside stairs, railings when appropriate, things like that.
All right. Okay, so let's take an example where you have the homeowner qualifies and gets the reverse mortgage. And like you mentioned before, they get a check in the mail, is that it, for $500? Let's say $500.
They can get a check in the mail, but they can also have it direct deposited into their account.
Okay, so every month, a certain date, we might say,
Yes.
$500 appears in the account.
Right?
And that's based on what? Is there any kind of formula? Let's say you talk to someone and you find out that the house has, let's say it has $120,000. The value is $120,000. There are no mortgages, no
Okay.
liens, nice and clean.
Okay.
What could they expect in regards to a reverse mortgage?
The amount of equity they'd be entitled to? Well, it depends on your age. The older you are, the more money that they're going to give you, because your
Oh.
life expectancy is less.
Okay.
But you can basically, I would say about 50% is an easy number to remember. So 50% of the equity is what you would get, but it can be anywhere from 45 to 68% usually.
I see. So, and depending on age, so the older the person is, the bigger the check could be.
Right?
Now, in some instances, maybe from, your experience, based on a $120,000 home, which today is almost, you don't find too many 120,000, up in the 250, 300,000.
Right, right.
I'm sure you've dealt with. Do you find that, what could be some of the high-end type checks, payments per month?
Oh, gosh. Well, again, there's a couple of different ways to do it. You can do a 10-year payment, which is for your lifetime. So the computer calculates a payment. So let's say it's someone who's 80, they may get out of this $60,000, $500 a month.
So you have these like actuarial
It's all
tables?
based on the actuarial tables, yes.
All right.
Whatever the interest rates are doing, how old you are, and what the value of your property, you'll get a percentage of that. And so it's the same for everybody in that exact scenario. But if there's two people, it's always the youngest borrower's age.
Oh, I see.
So if you have someone
the
who's,
80-year-old man's got a 45-year-old bride,
then the actuarial
it's
tables of
not
the
gonna do him too
45-year
good.
is based on the 45-year-old.
Yeah,
Yes.
all right, that's not gonna be too good. All right, so you find that the people who might be wanting to leave the area, spend time in Florida, things of that nature,
Yeah.
might be more interested in reverse mortgage than someone who's actually staying in the area?
It's both.
Both.
There's no, for me, I've seen it from, 62, you have to be Social Security retirement age
62.
is the minimum.
Yeah.
And there's no age limit. I've done them up to 107 so far. And so-
107?
Yeah, yeah. He was still driving and his children were driving
What did you
behind
wait
him.
so long for?
So, yeah.
All right, so the
And,
checks start coming in, and let's say the amount is $60,000.
Okay.
So the checks are based on the 60,000,
Right, right.
and in
Yeah.
other words, it's based against the 60,000,
Right.
the $500.
Right.
But the person dies. What happens to the reverse mortgage at that point?
Okay.
In other words, the person's been paid so much money. Let's say they were paid $20,000.
Okay. So there were closing costs that originally created when the loan was created. Any principal that was borrowed, so this $20,000, and then any interest that is accrued on this loan in mortgage insurance. So let's just say they owed $40,000 at the time.
And there's interest on that.
There's interest, yeah, I'm adding it all together, so I'm
Yeah.
assuming $20,000 plus the closing costs. Let's just say they owed $30,000. So in that case, there's 5 things that someone has to do for it to have this loan. Pay their real estate taxes, pay their homeowner's insurance, keep up with the health and safety issues of the property, not transfer title, and it has to be your primary residence. So if you've passed, it's no longer your primary residence. And that's both borrowers. So it's okay if there's still one alive. But if the
When you say it's okay, so if one
the
is still...
loan, if the one's still alive, the loan continues exactly
Okay.
as it was, if they're both on the
yeah,
loan.
Okay.
But if someone has passed, they have basically, now it's due and payable because it's not their primary residence anymore. And the family or the estate would have 6 months in which to sell the property or get a mortgage themselves for that 40 or 50,000, whatever it may be,
To pay off the
to pay
reverse.
off the reverse mortgage. And they can get a couple of extensions, but it's very specific. They need to be in contact with the lender. They have to get approval from HUD. So you can technically get up to a year to sell the property from the date of death.
And there's a possibility that the new owner could qualify for a reverse mortgage.
That is true,
So
yes.
in other words, if
They would refinance.
you know, dad is 90 years old and he
Mm-hmm.
passed, and
Yeah.
the son is only 65
Right, then he could get a reverse mortgage,
on
right,
the same piece of property.
correct.
Could he,
But if the numbers work, because again, the dad was probably older when he got it, was entitled to more money, so as long as the numbers work,
okay, so he can't just assume,
yeah, you cannot
it
just
has to
assume.
be all
Mm-hmm.
redone.
Correct. It's the day that when you apply what the value is, you get a pool of money, and it's different than what it's worth at any future point in time,
Right.
and what the loan balance is.
Now, at the closing,
Mm-hmm.
what can someone expect? Everything's been approved,
Mm-hmm.
but what can they expect at the closing as far as costs?
The costs. Okay, so there is 3 parts of the closing costs. Origination fees typically, traditional closing costs like there would be on a regular mortgage. And then there's also the mortgage insurance, and that's typically the highest number. So the mortgage insurance is HUD insuring the loan, and it's
Okay,
a
mortgage insurance, but
mortgage
that's with
insurance.
HUD.
It's with HUD, yes.
It's not with the lender.
No, it's HUD. HUD insures this, so it's the federal government's insurance pool, and they insure the loan, and it's a non-recourse loan, which is the only loan that has a non-recourse feature. So if you owe more than what your property is worth at the time that you are paying it off, because you passed or you're selling your property, you actually don't have to pay that. You or your heirs or estate do not pay the deficit. The insurance pool does that for you.
Oh, I see. Oh, okay,
Mm-hmm.
that's,
Just like if you were getting that $500 payment every single month and you have outlived the actuarial table's age, you will continue, regardless of what your equity position is, regardless of what the value of your property is, you will continue, you're guaranteed that $500 a month for the remainder of your lifetime.
all right. Now, let's go to the costs, because I think people are very interested.
Sure.
What would be roughly origination fees?
Yeah, well, it's usually 1% of the first $200,000, and then 2% of the first $200,000, and then 1% over that. Again, it's all federally regulated, so it's based on whatever the value is.
Mentioned fees?
And then closing costs, so you'd have the attorney's fees, the title insurance, the recording fees, just like you would with a traditional mortgage.
Okay, and these are pretty common fees?
Yeah, they're
Nothing,
standard, right? They're
know, because some
standard, they're
people-
disclosed from the very beginning. And
Yeah.
people actually have to do counseling. So in addition to meeting with someone like myself to understand and learn about it, the government has protected the consumer by saying you have to go and get this counseling certificate by a totally objective nonprofit agency that's going to teach you and refer and go over it with you to make sure that it's the right thing for you to.
What kind of agency would that be?
They're called credit counseling agencies that
All right.
actually do them.
Okay. And the last thing
Yeah,
is
the mortgage insurance. So
Yeah.
again, it all depends on how much you're taking out. So it can range anywhere from 0.5% to 2.5%, depending on what percentage of equity you're going to borrow initially.
All
So
right,
it's the more you take out, the higher the risk, is what the government's saying, because you potentially could have that loan longer. And so therefore, again, that deficit, they're charging more for the mortgage
Okay,
insurance.
so that's, yeah, a little thing that the government is keeping an eye on in regards
Correct.
to the mortgage insurance.
Correct, correct.
So, what you've just said, basically, the closing costs are pretty much what any buyer would expect in buying a house, a traditional.
Right, they might be a little bit more, because you've got to remember, no one gets paid on a reverse mortgage for possibly 5, 10, 20, 30 years. So they're slightly higher. The rates are a little bit different. The origination fees could be slightly higher because of those reasons.
And you mentioned there's interest involved.
And there's also interest. So what happens is whatever your outstanding balance is, interest accrues on it, as well as more mortgage insurance, another 0.5% annually.
And what would be a typical percentage on the outstanding?
For an interest rate, well, right now it's based on LIBOR, which is a really slow, it's a wholesale rate. So right now the average reverse mortgage adjustable is about 3.5%. And fixed could be 5, 4.99 or 5%.
Now, these sound like typical interest rates that someone would have to pay if they went to a bank to buy a house?
Right. Again, they're a little bit higher when you're comparing it, because you don't have to make a payment. That's the beauty of this, is you're deferring your payments until you sell your property.
So actually, it could go to Junior.
That's right.
Dad passes away, and the son comes along and finds out he's not going to get as much as he thought. But in the meanwhile, the homeowner, elderly and since 62 or over,
Right.
is able to get something out of the property, which,
Right.
well, maybe otherwise they would not be able to get unless they sold the property.
Correct. Right. It's important. It's really a financial planning tool. It's no longer the loan of last resort, which a lot of people have stated that it is. I only do that if I have to. But it's typically someone's largest asset.
So you could have $1 million in the bank and still get a reverse mortgage
Oh, absolutely.
just
Right.
because you wanted to do it.
Right. Sometimes the passing of that money through an estate plan might be the better option for people than the property itself.
Yeah, and maybe you don't want to give it to the kids because, well,
You've already mortgaged it and let them use some of the money. Yeah, that's fine.
yeah. Well, look, we're down at the end of the program. It goes
Okay.
by fast. Very interesting. Thank you very much.
You're welcome. Thanks for
Ellen
having me.
Connors, glad to have you, and hope to have you come back. Give us an update if there's any changes.
Sure.
I want to mention at Miller Monument, that's Memorial Day. We're going to have the ceremony there, 11:30 in the morning. It's at the intersection of South Main and Shove Streets. Remember Miller, Corporal David Miller, who's in the United States Army, served in the Philippines during World War II. At the outbreak, he was captured by the Japanese, put on the Bataan Death March, where 4,000 or 5,000 Americans and Filipinos were murdered by the Japanese. Eventually got to a prisoner of war camp where he died. Body was never returned to the United States, and the monument and ceremony is in his honor and in respect to all the veterans in the South and the Fall River and the city of Fall River that served in World War II. So, hope to see you there. Remember, it's Memorial Day at 11:30. So, once again, thank you, and we'll see you next time.